Welcome back to The Deep Dive. Today, we're plunging into a topic that sits right at the intersection of our everyday digital lives and the cutting edge of global finance. PayPal's bold venture into stablecoins with PayPal-USD, or PYUSD. Now, you know PayPal, it's that incredibly familiar name that's probably handled countless transactions for you, whether you're buying something online or, splitting a dinner bill with friends.
It's absolutely ubiquitous.
But what happens when a company that deeply integrated into our financial habits decides to launch its own digital dollar? It's a move that could really redefine how we all think about money.
It truly is. This isn't just another cryptocurrency appearing on the scene. This is a deliberate strategic play by a global fintech leader.
Strategic, yeah.
It's designed to weave blockchain technology into the very fabric of its core infrastructure. For you, our listener, understanding PYUSD offers, I think, a crucial shortcut to grasping how digital finance is currently evolving, what it means for your money, how you pay for goods and services, and even how global commerce might fundamentally shift in the near future. It's a fascinating case study, really, in how established players are adapting.
I see the strategic depth there. Our mission today, then, is to unpack this meticulously designed instrument. We'll explore the underlying reasons PayPal launched it, the robust architecture it's built upon to instill trust.
Trust is key.
Its sophisticated technical underpinnings across multiple blockchains, and what it could mean for the fiercely competitive landscape of digital payments. We've meticulously gathered insights from comprehensive strategic analyses, detailed reports from its issuer,
Paxos, right.
and observations from leading financial news outlets to give you a complete, balanced picture. So prepare for an insightful deep dive into PayPal's digital dollar sought. The genesis of PayPal-USD, why a fintech giant entered stablecoins. Okay, let's unpack this. When many of us hear cryptocurrency, our minds often jump straight to volatility, the dramatic price swings we've seen with assets like Bitcoin or Ethereum.
Yeah, that's the common perception.
But PYUSD is fundamentally different. It's a stablecoin. What exactly does that term imply, and what's PayPal's specific approach to building and maintaining that stability?
That's a critical distinction to make right from the start. At its core, PYUSD is what we call a fiat collateralized stablecoin.
Okay.
This means it's meticulously designed to maintain a stable value pegged 1.1 to the US dollar. Think of it as like a digital voucher that always equals exactly $1.
Oh, okay. Like a digital token for $1.
Exactly. But with all the technological advantages that come with being built on a public blockchain, things like speed, efficiency, and importantly, programmability.
Right.
This isn't about speculative asset trading. It's about providing a reliable digital medium of exchange. To achieve this unwavering 1.1 peg, for every single PYUSD token in circulation, an equivalent value is held in a reserve.
A reserve of what exactly?
A reserve of high-quality, highly liquid assets. We're talking about US dollar deposits, insured banks, short-term US treasuries, and similar cash equivalents. Really safe stuff. Got it.
This commitment to 1.1 collateralization is absolutely fundamental to its promise of stability and its redeemability for $1 at any time through its issuer.
Okay, that makes sense.
And this directly differentiates PYUSD from the highly volatile cryptocurrencies that grab headlines, and especially from uncollateralized algorithmic stablecoins.
Right. Those have had some issues.
They certainly have. Some catastrophic challenges, frankly. PYUSD aims to be a reliable, predictable digital dollar, not a roller coaster investment.
So the stability factor is paramount. But PayPal is already a payments behemoth, right? They launched crypto trading back in 2020.
They did, yes.
But this feels like a much more profound, deeper commitment. What's the real motivation behind a company of PayPal's scale choosing to step into the stablecoin arena now? Is it just keeping up with trends, or is there a bigger game at play here?
That's a brilliant question, and it really gets to the heart of PayPal's long-term vision. Their 2020 foray into crypto was largely a brokerage model, allowing users to simply buy, sell, and hold various cryptocurrencies. Right, like an add-on feature.
Exactly. PYUSD, which launched in August 2023, represents a far more ambitious and, strategic imperative. PayPal isn't just reacting to the market. They're actively trying to shape the future infrastructure of digital finance itself.
Shape it how?
Well, what's truly fascinating here is their intent to address some of the most persistent and costly inefficiencies in the existing global financial system.
Like what?
PYUSD directly targets issues like high fees, painfully slow settlement times, sometimes days.
Oh, yeah. Cross-border can be slow.
Definitely.
And
and the multitude of intermediaries that characterize traditional cross-border payments and remittances. By leveraging public blockchain technology, PayPal aims to facilitate more direct, peer-to-peer value transfers, drastically reducing friction, cost, and time.
So cutting out the middleman, essentially.
In many ways, yes.
Yeah.
This isn't a tentative experiment. It's a strategic offensive to capture value and market share. PYUSD powerfully enhances PayPal's own ecosystem.
How so?
By creating a strong incentive for its over 400 million active users to transact within their vertically integrated system. It creates this kind of closed-loop dynamic.
Keeping it all in-house.
Precisely. Fostering greater user engagement and, critically, lessening PayPal's reliance on expensive external payment rails, like the credit card networks that, extract a percentage from every transaction.
Right, the interchange fees.
Exactly. Think about their Pay with Crypto service. It uses PYUSD as a stable internal settlement layer, and they explicitly highlight its potential to slash international transaction fees by up to 90% compared to traditional credit card processing.
Wow, 90%. That's huge.
It's a direct challenge to the incumbent payment infrastructure.
Yeah.
PayPal isn't just looking to process payments. They want to own the rails, capturing value currently extracted by a long chain of financial intermediaries.
That's a huge, ambitious shift. So for you, the person actually using PayPal or Venmo, what does this all practically mean? What are the immediate, tangible benefits that PYUSD brings to your digital wallet?
Well, the value proposition here is meticulously tailored to resonate with several key groups. For you, as a consumer, it offers a stable digital asset that's seamlessly integrated into your daily financial life.
Okay.
Imagine being able to make fee-free peer-to-peer, P2P, payments to friends and family across the U.S. on both PayPal and Venmo.
Fee-free P2P, that's nice.
Or using it for online purchases at millions of merchants. Furthermore, it serves as a secure and familiar on-ramp to the broader Web3 ecosystem.
Web3, so the decentralized internet.
That's the vision, yeah. A decentralized internet where you have more control over your data and assets, all directly accessible through the PayPal and Venmo apps you already know and trust.
Okay, so an easy entry point. What about businesses?
For merchants, PYUSD genuinely unlocks access to a growing global market of cryptocurrency users. Through PayPal's Pay with Crypto feature, merchants can accept payments from customers holding a wide array of digital assets.
Over 100, I think you mentioned.
That's right. All settle instantly in PYUSD, which completely mitigates their exposure to cryptocurrency price volatility.
So the merchant doesn't have to worry about Bitcoin crashing mid-transaction.
Exactly. The benefits are significant, potentially much lower transaction fees, especially for cross-border sales and near-instant settlement of funds. That drastically improves cash flow compared to the multi-day cycles often associated with traditional card payments.
Instant settlement is a big deal for cash flow.
Huge. And for developers. PYUSD provides a compliant, programmable foundational layer for building next-generation financial applications. As an ERC20 token, that universal language for tokens on Ethereum and now extending to other chains.
We'll get to the multi-chain part later.
We will. It easily integrates into decentralized applications, or dApps, digital wallets, and exchanges, effectively bridging traditional finance with the innovative Web3 economy. 2. Building trust, the architecture and regulation behind PYUSD.
Trust is absolutely paramount, especially when we're talking about your money. When a new digital currency emerges, a natural question is, who's actually holding the funds? How secure is it? It's clear PayPal isn't going it alone here, right? They've partnered with a specialist.
Precisely. The operational structure of PYUSD involves a very clear division of responsibilities, which is crucial for both regulatory clarity and operational integrity. It's built on a robust two-party system.
Two parties? Who are they?
Paxos Trust Company, LLC, is the official issuer of record for PYUSD.
Paxos.
As a fully chartered, limited-purpose trust company, Paxos handles the core critical functions. They mint new PYUSD tokens when new funds are received. They burn tokens upon redemption requests. And most importantly, they manage the underlying reserve assets.
So they handle the money management side.
Exactly. And these reserves are held in segregated bankruptcy remote accounts.
Bankruptcy remote, what does that mean?
It means they are kept entirely separate from Paxos' own operating funds, offering an additional layer of protection for PYUSD holders if Paxos were to face financial difficulty.
Okay, that's important. So what does PayPal do?
PayPal's role, on the other hand, is primarily distribution, integration, and user experience. They leverage their globally recognized brand, their battle-tested security protocols, and their massive existing user base to drive adoption and ensure PYUSD is seamlessly integrated into your daily financial life.
So PayPal's the face, Paxos is the engine room.
That's a good way to put it. For most users, the Paxos infrastructure operates entirely seamlessly in the background, and that's a deliberate choice. It allows each party to focus on its core competency.
Like a bank and a retailer.
Kinda, yeah. Think of it like a highly specialized bank, Paxos, handling the vaults and the core financial operations, while a trusted, universally recognized platform, PayPal, provides the user-friendly storefront and robust distribution network. This separation allows Paxos to concentrate on regulated custody and issuance, while PayPal focuses on building out that user-friendly payment network.
When we talk about trust, regulation immediately comes to mind. Are these digital dollars just out in the Wild West, or is someone watching over them? What's the regulatory framework here that should reassure us?
This is arguably PYUSD's most significant competitive differentiator and a huge confidence booster. Both Paxos, the issuer, and PayPal Inc., its primary distributor, are licensed to engage in virtual currency business activity by the New York State Department of Financial Services, or NYDFS.
NYDFS. I've heard they're tough.
They are. This isn't just a small detail. The NYDFS is consistently recognized as one of the most rigorous and respected financial regulators in the United States, often referred to as a gold standard.
Gold standard, okay.
This NYDFS charter imposes strict ongoing requirements across a wide spectrum of operations, stringent consumer protection measures, robust cybersecurity protocols, meticulous reserve management, and strict compliance with anti-money laundering, AML, and Know Your Customer KYC laws.
So serious oversight.
Very serious. This provides an institutional-grade seal of approval, immediately setting PYUSD apart from many competitors, especially those like Tether, which, has historically faced scrutiny over its reserve composition and overall regulatory clarity.
Right, the Tether questions have been around for a while.
They have. This framework is a deliberate strategic choice by PayPal and Paxos, prioritizing compliance to build a credible, trustworthy bridge from traditional finance into the Web3 world. It's a pragmatic compromise, you could say.
Compromise? How so?
Well, features like the ability to freeze funds, which the NYDFS requires, are indeed antithetical to the crypto-native ideal of decentralization.
Right, the crypto purists don't like that.
No, they see it as a vulnerability, a central point of control. But these features are absolutely essential for gaining the trust of mainstream users and regulated institutions. This isn't a design flaw, but a strategic decision for broader adoption, positioning PYUSD as the safe, stablecoin for enterprises and everyday consumers who value that regulatory assurance.
So it's operating under robust regulation. But what exactly constitutes those reserves? When they tell us it's backed 1.1, what does that actually look like in practice? Is it just cash or something more complex?
That's a great question. The stability and trustworthiness of PYUSD are inextricably linked to the quality and transparency of its backing assets. The reserves are mandated to be held 100% in highly liquid, low-risk assets.
Okay, low risk. Like what?
Specifically, these assets predominantly include U.S. dollar deposits held in segregated accounts at insured depository institutions, U.S. Treasuries guaranteed by the full faith and credit of the U.S. government, arguably one of the safest assets in the world.
Can't get much safer than treasuries.
Pretty much. And U.S. Treasury reverse repurchase agreements or reverse repos.
Reverse repos. Can you explain those quickly?
Sure. Essentially, Paxos lends cash overnight to large financial institutions, and those loans are fully collateralized by U.S. Treasuries held by Paxos. It's considered very safe and highly liquid. An independent analysis of the reserve composition often shows something like, say, 97% in these overnight reverse repos and maybe 3% in cash.
So heavily weighted towards super safe liquid assets.
Exactly. It highlights a relentless focus on both liquidity and safety, ensuring that the backing is robust, verifiable, and readily available should mass redemptions occur.
Okay. And does Paxos make money from holding these reserves?
That's an interesting point. Yes, Paxos is permitted to hold these assets in a manner that generates interest, a yield. This yield serves as a revenue stream for both Paxos and PayPal, covering the significant operational costs associated with custody, issuance, and maintaining such a compliant infrastructure.
But that yield doesn't go to the PYUSD holder.
Correct. That yield is not passed on to individual PYUSD holders. The structure is common for stablecoin issuers. It allows them to fund their operations while providing a zero-yield asset to users that prioritizes stability and utility above all else.
So they say the reserves are there, but how do we know for sure? It's one thing to make a claim, but another entirely to prove it consistently. What mechanisms are in place for transparency and verification?
This raises an important and entirely valid question, and it's addressed through a commitment to robust transparency and rigorous third-party attestation.
Attestation, like an audit.
Similar, yes. Paxos is dedicated to a very high degree of public reporting. The company publishes comprehensive public monthly reserve reports that meticulously detail the exact composition of the asset portfolio supporting PYUSD. These aren't just high-level summaries. They provide granular breakdowns.
Okay, monthly reports.
Furthermore, and this is crucial, Paxos commissions and provides monthly attestation reports issued by an independent third-party accounting firm.
A separate accounting firm checks their work.
Exactly. These reports serve to independently verify that the reserves fully collateralize the outstanding supply of PYUSD. This practice of regular independent verification is a cornerstone of their trust-building strategy and a direct, proactive response to market demands for greater transparency, especially after past controversies involving other stablecoins.
So, regular proof.
It provides that essential, verifiable layer of proof that the backing is exactly as stated, aiming to build confidence for both individual users and institutional partners.
With all this talk of robust regulation and trustworthy backing, it's easy to assume traditional protections like, say, bank insurance are automatically in place. But are they? What should you, our listener, be explicitly aware of regarding the risks and limitations of holding PYUSD?
This is an absolutely critical point that every single user needs to understand clearly. Despite the robust regulatory framework and high-quality reserves, there are distinct limitations to the protections offered that differentiate PYUSD from traditional bank deposits.
Okay, what are they?
PayPal's own legal disclosures state unequivocally that PYUSD and other crypto assets are not legal tender.
Not legal tender, got it.
And critically, they are not insured by the Federal Deposit Insurance Corporation, FDIC, or the Securities Investor Protection Corporation, SIPC.
No FDIC or SIPC insurance, that's big.
It is. What does this mean in practical terms for you? It means that your PYUSD funds are not protected against the failure of Paxos or PayPal in the same way that your deposits at a traditional bank are.
So if, hypothetically, Paxos went bankrupt,
your PYUSD could be at risk, unlike a bank deposit, which is insured up to $250,000 per depositor by the FDIC. While PayPal does offer a limited discretionary reimbursement for unauthorized transfers, for instance, if your account is hacked up to a lifetime maximum of $50,000.
Okay, some protection against hacks.
Yes, but it's a company warranty, a discretionary policy, not government-backed insurance. This distinction is vital for you to understand. It highlights the unique nature of digital asset holdings even within an otherwise regulated environment. It's an attractive, stable digital dollar, but it doesn't carry the same safety net as a traditional bank deposit. That's the trade-off. 3.3. The technical backbone, a multi-chain strategy for efficiency.
Now, let's get a bit into the technical side, but don't worry, we'll keep it accessible and relatable. When PYUSD initially launched, it chose a very familiar and robust home in the crypto world. Where did it begin its digital journey?
Absolutely. PYUSD made its debut in August 2023 as an ERC20 token on the Ethereum blockchain.
Ethereum, okay, the big one.
Exactly. This was a highly strategic initial choice, and for good reason. Ethereum is the largest and most established smart contract platform, essentially. A global, decentralized computer that can automatically execute agreements coded into its system.
Right.
It boasts the deepest liquidity and the most developed ecosystem for decentralized finance, or DeFi.
DeFi, yeah. Lending, borrowing, all that.
Precisely. Aims to recreate traditional financial services without intermediaries by adhering to the ubiquitous ERC20 standard, which acts like a universal language or blueprint for tokens on Ethereum.
Like a common standard everyone uses.
Exactly. PYUSD gained immediate compatibility with a vast array of existing infrastructure. We're talking popular digital wallets like MetaMask, major cryptocurrency exchanges worldwide, and thousands of decentralized applications.
So instant integration.
Pretty much. This decision significantly facilitated its rapid integration into the broader crypto economy, making it instantly accessible to developers and crypto-native users from day one. Its public contract address on Ethereum, for those interested, is 0x6C3E90364068506290770BFC AET 23A08.
Okay. Ethereum is undeniably robust, but it can sometimes be slow and, let's be honest, quite expensive for smaller transactions due to what we call gas fees.
Yeah, gas fees can be a real pain point, especially during busy times.
So what was PayPal's next step for PYUSD to specifically address those payment-specific challenges and really scale for everyday use?
This is where it gets really interesting and shows PayPal's clear focus on practical utility for payments. In a strong signal of its intent, PayPal expanded PYUSD to the Solana blockchain in May 2024.
Solana, known for speed, right?
Exactly. This move was explicitly driven by Solana's distinct technical advantages for high-frequency, high-volume transaction environments.
Huh.
Solana is renowned for its exceptional throughput, capable of processing thousands of transactions per second.
Thousands. Compared to Ethereum's, what, 15?
Roughly, yeah.
Yeah.
Much, much higher capacity. And crucially, Solana offers near-zero network fees, typically amounting to less than a cent per transaction.
Less than a cent. Wow.
These characteristics make Solana an ideal settlement layer for everyday retail payments, microtransactions, and other peer-to-peer use cases, where the high and often volatile gas fees on Ethereum's mainnet would simply be prohibitive.
So much better for small, everyday payments.
Definitely. And on Solana, PYUSD is built using the Advanced Token Extension Standard, also called Token 2022. Think of this as a souped-up token blueprint compared to the basic ERC20.
Souped up how?
It allows for powerful enterprise-grade features to be programmed directly at the token level. Things like transfer hooks that can trigger actions based on transfers, confidential transfers for privacy, and required transaction memos for enhanced compliance and payment logic, all without needing additional complex smart contracts.
So more features built right into the token itself.
Precisely. It's a foundational layer for sophisticated, compliant digital payments.
So we have Ethereum for broad compatibility and Solana for speed and low costs. That covers a lot of ground. But what about connecting all these different digital places? How do you move your PYUSD between them seamlessly and efficiently without getting lost in the digital ether?
That's precisely where scalability and, crucially, interoperability become paramount for a truly global digital dollar.
Interoperability, making the chains talk to each other.
Essentially, yes.
Yeah.
PYUSD has also strategically been deployed on Arbitrum.
Arbitrum, what's that?
Arbitrum is a leading Layer 2 scaling solution for Ethereum. For you, this means you can transact with PYUSD within the inherent security and broad ecosystem of Ethereum, but with significantly faster speeds and substantially lower costs than directly on the main Ethereum blockchain. It's like an express lane for Ethereum.
Okay, faster and cheaper Ethereum transactions. But how do you move between Ethereum, Solana, Arbitrum?
Right. To ensure seamless, trustless movement of PYUSD between these disparate blockchains, PayPal has integrated with Layer 0.
Layer 0, another new name.
Layer 0 is a cutting-edge interoperability protocol. Think of it as a universal translator and secure courier service for different blockchains.
A translator and courier, I like that.
Instead of having to build separate, potentially risky bridges for each chain which have been hacked in the past, Layer 0 allows users and applications to programmatically transfer PYUSD between, say, Ethereum and Solana without relying on those traditional third-party bridges.
So more secure and direct transfers between chains.
That's the goal. This integration is designed to eliminate price slippage between chains, drastically speed up cross-chain transfers to mere minutes, and crucially, enhance security by maintaining a single, unified supply of PYUSD across all networks.
Unified supply, meaning the total number of PYUSD stays the same.
Exactly. It ensures that the total number of PYUSD tokens remains consistent, regardless of which chain they reside on at any given moment.
That sounds like a sophisticated, forward-thinking plan to cover all bases. What else is on the horizon for this multi-chain approach? Where else might PYUSD go as PayPal expands its reach?
Looking further ahead, PayPal has already announced ambitious plans to issue PYUSD on the Stellar network, pending final approval from the NYDFS.
Stellar. What's the focus there?
This is a highly strategic move, aimed squarely at disrupting the global remittance and cross-border payments market. The Stellar blockchain was specifically designed from the ground up for efficient, low-cost asset issuance and incredibly fast cross-border transactions.
So purpose-built for remittances.
Exactly. This makes it a perfect fit for PayPal's grand ambitions in that global remittance market. This expansion to Stellar will powerfully support PayPal's overarching goal of revolutionizing how money moves globally, particularly in emerging markets where Stellar already boasts a significant footprint and establish on- and off-ramps into local currencies.
On- and off-ramps meaning ways to get local currency in and out.
Precisely. It's a clear indication that PayPal is thinking globally about where PYUSD can have the most impact.
So when we put all these different blockchain integrations together, Ethereum, Solana, Arbitrum, and eventually Stellar, what does this multi-chain strategy ultimately add up to for you, the user? Is it just a collection of different tokens on different chains or something far more cohesive and intelligent?
This is absolutely not a fragmented or haphazard approach. It's a deeply holistic and forward-thinking strategy designed to largely abstract the underlying blockchain technology away from the end user.
Abstract it away, meaning I don't need to worry about which chain I'm using.
Ideally, yes. A customer using the PayPal or Venmo app will simply see a single unified PYUSD balance. In the background, PayPal's intelligent systems can then programmatically route your transaction over the most efficient and cost-effective blockchain rail for the specific task at hand.
So PayPal chooses the best chain for the job automatically.
That's the vision. Imagine this. You might use Solana for a quick point-of-sale purchase because it's fast and cheap.
Right.
Then seamlessly use Ethereum for an interaction with a complex DeFi protocol where its robust smart contract capabilities are needed. Or potentially Stellar for a low-cost remittance to another country. PYUSD thus transforms from a mere token on any single chain into a versatile, dynamic digital dollar standard.
The standard, yeah.
Powered by an intelligent multi-chain settlement layer that works tirelessly and invisibly behind the scenes to optimize every single transaction. It's about utility, flexibility, and efficiency, all hidden beneath a familiar user interface.
Yeah.
4. PayPal's ecosystem, the engine for mass adoption.
This is where PayPal's real superpower comes into play, its enormous ingrained user base. How are they leveraging that to drive mass adoption of PYUSD and make it something more than just a niche crypto asset?
This is truly critical. The most formidable asset in PYUSD's entire arsenal isn't its underlying technology, no matter how sophisticated it is.
It's the network.
It's unparalleled distribution network.
Yeah.
The massive, engaged, and trusted ecosystem of PayPal and Venmo. The primary strategy for mass adoption is built around making PYUSD effortlessly accessible and incredibly easy to use.
Easy.
Eligible U.S. customers can seamlessly buy, sell, hold, and transfer PYUSD directly within the familiar PayPal and Venmo applications they already use daily and, crucially, already trust. The user journey is intentionally designed to mirror managing a traditional fiat balance.
So it feels just like managing dollars in the app.
Pretty much. This cleverly abstracts away many of the typical complexities associated with cryptocurrencies, such as managing private keys, understanding network congestion, or grappling with volatile gas fees for on-platform transfers.
Right, no complex crypto stuff if you stay inside PayPal.
Exactly. This significantly lowers the barrier to entry for the millions of crypto-curious users, allowing them to engage without needing to become blockchain experts overnight. And a truly critical element here is the fee structure.
Ah, yes, the fees, or lack thereof.
Well, PayPal has deliberately eliminated fees for buying, selling, holding, or sending PYUSD to other users on PayPal and Venmo within the United States.
0 fees for P2P within the U.S. on PayPal, Venmo? That's attractive.
Very. Fees are generally only incurred when you're converting PYUSD to other cryptocurrencies, or for the underlying network fees if you're transferring PYUSD to an external non-PayPal crypto wallet.
Okay, so moving it outside the ecosystem might cost something?
Correct. The standard blockchain network fees would apply then. But inside, it's designed for frictionless use.
Okay, so it's easy to get and send PYUSD within PayPal's ecosystem. But for me as a user, my regular dollars are already safe in my bank, perhaps even earning a little interest. What's the compelling reason, the hook, to actually hold my money in PYUSD rather than just converting it for transactions? Is there an incentive to keep it within the PayPal ecosystem?
It's a very sharp question, and yes, there absolutely is. To encourage users not only to acquire PYUSD, but to keep it within the ecosystem, PayPal has introduced a compelling rewards program.
Rewards.
Like interest.
Essentially, yes. Eligible users can opt in to earn a variable annual yield on their PYUSD balance with announced rates that have been around 3.7 to 4%.
3.7 to 4% yield. That's competitive with some savings accounts. Exactly. This program is a direct strategic move designed to compete squarely with traditional high-yield savings accounts and other short-term investment vehicles. It effectively transforms your idle cash balance within PayPal into a productive, yield-bearing asset.
Making your PayPal balance work for you.
Right, which significantly increases the stickiness of the PayPal platform and subtly disincentivizes immediate cash outs to conventional bank accounts. The rewards, which are paid out monthly in PYUSD,
Paid in PYUSD. Yeah.
can then be immediately used for payments, transfers, or conversions, further reinforcing the utility and value of the stablecoin within the PayPal ecosystem.
But again, no FDIC insurance on that yield-bearing balance, right?
Crucially, no. That's the trade-off. While attractive, these yields often come without the traditional FDIC or SIPC protections you'd expect from a bank or brokerage account. It's a compelling incentive, but one that comes with a different risk profile. Users need to weigh that.
Beyond individual users, what's the big draw for merchants? How does PYUSD connect them to the broader, burgeoning crypto economy in a way that's beneficial and, well, de-risked?
PayPal is brilliantly leveraging PYUSD as the foundational backbone of its broader crypto commerce strategy through its Pay with Crypto service.
Pay with crypto, right.
This feature is a genuine game changer for businesses, particularly those looking to expand their reach globally. It enables U.S. merchants to seamlessly accept payments from customers holding over 100 different cryptocurrencies.
Tapping into that huge crypto user base.
Exactly, tapping into a global market estimated to include over 650 million crypto users. The real magic happens behind the scenes, when a customer pays with a volatile asset like Bitcoin or Ethereum.
The risky stuff.
Right. PayPal handles the instantaneous conversion into PYUSD, which then serves as the stable settlement layer. Merchants can then choose to receive the final payment in U.S. dollars, completely shielding them from cryptocurrency price volatility and operational complexities.
So the merchant gets dollars, PayPal handles the crypto conversion via PYUSD.
Precisely. This firmly positions PYUSD as the internal foundational currency for PayPal's entire crypto payments infrastructure. The company is also actively promoting PYUSD for direct business-to-business, B2B payments.
B2B payments, how does that work?
Highlighting its benefits of near-instant settlement and substantially reduced costs compared to traditional wire transfers or international payments. A notable early use case was an invoice payment from PayPal itself to the global accounting firm Ernst & Young using PYUSD.
Using their own product for real business. Dog fooding, as they say.
Exactly. Demonstrating its enterprise-level viability and its potential for transforming corporate treasury operations.
Cross-border payments are notoriously expensive and slow, often filled with hidden fees.
Yeah.
How does PYUSD fit into PayPal's global strategy, particularly for remittances, which are vital for so many families worldwide?
You've hit on a multi-trillion-dollar market that is a key strategic focus for PYUSD. The global remittance market is ripe for disruption.
Definitely.
Users can already fund international money transfers on PayPal's Xoom service using their PYUSD balance.
Xoom, right? Their remittance arm.
Correct. And PayPal is going a step further by waiving its own transaction fees for these PYUSD-funded transfers.
Waiving fees, that's significant.
It is. This move directly challenges traditional remittance providers like Western Union and MoneyGram, which are often characterized by high fees, unfavorable exchange rates, and slow processing times that can leave recipients waiting for days.
Yeah, waiting days for money can be tough.
Absolutely. And the planned integration with the Stellar network, which we discussed earlier, is explicitly aimed at supercharging this goal. Stellar's design is optimized for low-cost, fast international transfers, potentially expanding low-cost remittance services to over 170 countries.
Especially helpful in emerging markets, I imagine.
Exactly. This is particularly impactful in emerging markets where traditional financial services are often expensive, inefficient, or simply inaccessible, offering a truly transformative impact for individuals and local economies.
So when we look at this holistic integration, the effortless onboarding, the yield program, the merchant solutions, the global remittance focus, what does this ultimately mean for the wider adoption of digital assets and blockchain technology?
Well, this holistic approach essentially weaponizes PayPal's immense user experience, trusted brand, and deep operational expertise to create what some observers are calling a Trojan horse for mainstream crypto adoption.
A Trojan horse. Explain that.
The company isn't primarily selling a technological product called PYUSD. Instead, it's selling a better, faster, and cheaper way for you to pay, save, and send money.
Focusing on the benefit, not the tech.
Exactly. With PYUSD serving as the invisible underlying engine, this strategy holds the immense potential to onboard tens, even hundreds of millions of users into the digital asset economy without them ever needing to understand the technical intricacies of blockchain or even realize they're using a stablecoin.
Just using PayPal like they always do, but powered by crypto underneath.
Precisely. This seamless integration could fundamentally normalize stablecoins, making them just another more efficient form of digital money. It could very well serve as the most significant catalyst for mainstream digital asset adoption to date, fundamentally transforming how people interact with digital currency on a daily basis, simply because it's built into a platform they already trust and use. v. PYUSD in the market. Competitive landscape and positioning.
PYUSD isn't entering an empty room, though. The stablecoin market is already quite mature and highly competitive. How big is this market overall, and where does PYUSD currently stand within it?
You're right, this is far from a greenfield. The global market for stablecoins is indeed vast and represents a cornerstone of the broader digital asset economy. Its total market capitalization is estimated to hover somewhere between $250 billion and $268 billion.
Wow, over $250 billion.
It's substantial. And crucially, the overwhelming majority, about 99% of this market, is pegged to the US dollar. So the digital dollar is effectively the reserve currency of the crypto world.
Okay, so where does PYUSD fit in that huge market?
Within this sizable market, PYUSD's current standing, while growing impressively, is still, well, modest. As of late 2024 and early 2025, its market capitalization has fluctuated, but generally sits around $1.18 billion to $1.19 billion.
Just over $1 billion, so small compared to $250 billion.
Relatively small, yes. This positions it as the sixth largest stablecoin globally by market cap. In terms of overall market share, PYUSD commands roughly 0.44% of the total stablecoin market.
Less than 0.5%.
Right. And an even smaller fraction, about 0.03%, within the broader multi-trillion-dollar cryptocurrency market. So while it's made significant strides and established itself quickly, it's still a relatively small, albeit rapidly expanding player in a very large and deeply entrenched arena.
When we talk about stablecoins, two names usually dominate the conversation: Tether, or USDT, and Circle, or USDC. How does PYUSD stack up against these incumbent giants that have been around for years?
Yeah, the stablecoin market is very much a duopoly, overwhelmingly controlled by these two giants. First, you have Tether, USDT,
The big one.
the undisputed market leader, boasting a colossal market capitalization of approximately $169 billion.
$169 billion.
Wow. USDT functions as the primary liquidity and settlement asset for global crypto trading, widely used on exchanges for arbitrage and fast transfers. However, its long-standing dominance has been shadowed by persistent concerns regarding the transparency and, at times, the quality of its reserve assets.
You're right, the reserve questions again.
Which have historically included less liquid instruments like commercial paper and secured loans, leading to periods of market uncertainty. Then we have Circle, or USDC.
USDC also quite large.
The second largest player, with a market capitalization hovering around $72 billion. Now, like PYUSD, USDC is issued by a regulated U.S. financial institution, Circle.
Okay, regulated like PYUSD.
Yes, and it places a strong emphasis on compliance, transparency, and holding high-quality liquid reserves. This makes USDC a far more direct and formidable competitor to PYUSD.
Because they're both targeting that regulated, trustworthy space.
Exactly. Both vie for institutional adoption, enterprise solutions, and payment-related use cases, especially in the U.S. market. PYUSD, as we noted, is currently orders of magnitude smaller than both incumbents.
So PayPal's strategy isn't just about size then?
No, its strategic play isn't to directly challenge USDT in high-frequency trading, but rather to compete head-on with USDC for the mantle of the most trusted and seamlessly integrated regulated stablecoin.
Using its ecosystem as the weapon.
Precisely. Leveraging its unique built-in payment ecosystem as its primary competitive advantage.
Beyond these fiat-backed giants, are there other types of stablecoins out there that operate on a fundamentally different philosophy or technological approach?
Yes, there's a significant and philosophically distinct player in the market, DAI, or DAI.
DAI.
That's right, it's the largest decentralized stablecoin. It maintains a market capitalization ranging from about $4.4 billion to $5.3 billion.
Decentralized. How does that work without dollar reserves?
Unlike fiat-collateralized stablecoins like PYUSD, DAI is not backed by actual dollars held in a bank account. Instead, its value is algorithmically maintained by a surplus of various crypto assets, things like Ethereum, which are locked as collateral in the smart contracts of the Maker protocol.
So backed by crypto, not cash.
Correct. DAI and PYUSD operate on fundamentally different philosophies. DAI's core value proposition is its decentralization and censorship resistance, appealing strongly to crypto-native users and DeFi purists who prioritize autonomy and resist any central control.
The ones who dislike PYUSD's freeze function.
Exactly. PYUSD, conversely, targets mainstream users and institutions who prioritize regulatory certainty, ease of use, and the backing of a recognizable corporate entity. They are, therefore, in many ways, competitors in name only.
Serving different audiences.
Right, serving largely separate segments of the market with distinct priorities and risk appetites. Each fills a specific need for a stable digital asset, but they do so in very different ways.
PYUSD's market cap has seen some notable fluctuations since its launch. It went up quickly, then down, now back up a bit. What does that tell us about its initial adoption? And is it being used in the way PayPal intended, or for something else entirely?
Yeah, PYUSD's growth trajectory has indeed been notable, but also quite volatile, giving us some interesting insights. Its market capitalization surged rapidly to over $1 billion shortly after launch.
Big initial jump.
But much of this initial surge was actually propelled by generous yield incentives offered on various DeFi lending platforms, particularly within the Solana ecosystem.
Ah, people chasing high interest rates, the yield firming.
Exactly. These platforms effectively offered attractive interest rates to users who deposited PYUSD. However, when these subsidized yields inevitably tapered off,
As they always do.
right, a significant portion of this mercenary capital users, driven purely by the highest yield, departed, causing PYUSD's market cap to fall by about 40% before it recovered to its current level above $1.1 billion.
So the hot money left when the yield dropped.
Pretty much. While this volatility highlights the inherent challenges of building truly sustainable liquidity in the competitive DeFi landscape, underlying transaction data tells a more encouraging story about genuine, utility-driven adoption.
Oh, what does the data show?
Analysis of on-chain data reveals that the vast majority of PYUSD transactions, over 80% on Ethereum and 90% on Solana, are for smaller amounts, typically under $1,000.
Small transactions, like payments.
Exactly. Furthermore, its transaction velocity, which is a measure of how frequently the token changes hands or is used, is remarkably on par with that of the much larger USDT and USDC.
So it's being used as often as the big guys, just for smaller amounts.
That's what the data suggests. It strongly indicates that PYUSD is indeed being used as intended, for everyday payments, small value transfers, and peer-to-peer transactions, rather than just for large-scale trading or speculative investment. It implies real-world usage beyond simply chasing yield.
That's a positive sign for PayPal's strategy, then.
I think so, yes.
To really crystallize all these comparisons, we've been looking at a side-by-side analysis of PYUSD against its competitors. When we put them all next to each other, what are the absolute key takeaways for our listener? What really matters?
Instead of rattling off a long list of specs, let's cut to the chase and synthesize the most important distinctions. When we compare PYUSD to the other big players like Tether, Circle, and DAI, two things truly stand out as critical differentiators for you.
Okay, what are they?
First, PYUSD's regulatory backing is absolutely on par with Circle's USDC, both being licensed by the rigorous NYDFS. This positions them head and shoulders above Tether's USDT, which has consistently faced questions about its oversight and reserve quality, and it's fundamentally different from DAI's decentralized, unregulated model.
So top-tier regulation alongside USDC.
Right. This regulatory strength translates directly into a higher level of trust for mainstream users and institutions. Second, while PYUSD's market capitalization is still relatively small compared to these giants, PayPal's unique and unmatched advantage lies in its built-in payments ecosystem.
The 400 million users.
Exactly. None of the other stablecoins can offer direct, seamless integration into a platform with that kind of active user base. This means PYUSD's primary competition isn't just a battle for market cap, but a battle with USDC for the regulated digital dollar market, with PayPal's immense distribution and payments infrastructure serving as its unique and powerful differentiator, fostering real-world utility over pure trading volume. Strategic outlook. Opportunities, challenges, and PayPal's Web3 vision.
Looking ahead, what are PYUSD's biggest advantages against such deeply entrenched and well-capitalized competition? What gives it the best chance of carving out a significant niche and truly succeeding?
PYUSD's most profound competitive advantage is less about groundbreaking technology, though its multi-chain approach is quite sophisticated, and more about its structural position. It leverages PayPal's existing immense strengths in a way no other stablecoin can.
The network effect again?
Absolutely. PayPal's vast ecosystem, encompassing over 400 million active consumer and merchant accounts globally, provides an unparalleled, ready-made distribution channel. No other stablecoin issuer or even traditional bank possesses the ability to introduce its product directly to such a massive and engaged user base overnight.
Instant reach.
Right. This allows PayPal to potentially circumvent the slow, organic, crypto-native growth path that other projects must painstakingly follow, instead driving adoption through its existing mainstream platforms that are already part of people's daily lives.
And the brand helps too, I imagine.
Hugely. Furthermore, in an industry frequently marred by security breaches, high-profile fraud, and even spectacular company collapses.
Yeah, crypto's had its share of scandals.
It has. The PayPal brand itself is an absolutely powerful asset. Decades of experience in secure digital payments have cultivated a level of consumer trust that can significantly lower the perceived risk and hesitation associated with adopting a new digital currency.
People trust the PayPal name.
They do. For many users, PYUSD will likely be their very first interaction with a stablecoin, and the familiar, trusted PayPal brand provides a crucial layer of reassurance that others simply cannot match.
Even with those significant strengths, every big play comes with formidable challenges. What are the key hurdles that PYUSD faces, despite its advantageous position as it tries to grow and gain wider adoption?
Despite its undeniable strengths, PYUSD faces several significant hurdles that are important to acknowledge. First, there's the monumental challenge of market incumbency.
Competing with USDT and USDC's head start.
Exactly. Tether and USDC have a multi-year head start, resulting in deeply entrenched liquidity pools and powerful network effects across thousands of exchanges, wallets, and DeFi protocols. Dislodging these incumbents, particularly in their core markets, high-frequency crypto trading for USDT and institutional DeFi for USDC, is an incredibly monumental task. It will require sustained investment, innovation, and a continuously compelling value proposition.
Okay, incumbency is tough. What else?
Second, there's the ongoing criticism regarding centralization risk. We touched on this.
The freeze function.
Right. The very features that ensure PYUSD's regulatory compliance, such as the ability of the issuer to freeze assets and block addresses on the smart contract, are viewed by the crypto-native community as a centralization attack vector. This capability, while necessary for traditional financial oversight, runs contrary to the core principles of censorship resistance and decentralization that many in the purest segments of DeFi hold dear.
So it might not appeal to the hardcore DeFi crowd?
It may inherently limit PYUSD's adoption within those specific, ideologically driven segments of the market. Finally, the global regulatory landscape for stablecoins is still in its nascent stage.
It's still evolving.
And it remains a significant source of uncertainty. Future legislation in the U.S. or other key jurisdictions could impose new, more stringent requirements, potentially impacting PYUSD's operational model, its profitability, or even certain use cases, requiring constant adaptation.
So navigating future regulations is another challenge.
Exactly.
That's a fair assessment of the headwinds. But where can PYUSD truly shine and carve out its unique niche for future growth, leveraging its strengths against those challenges? What are the biggest opportunities for this digital dollar?
Well, PYUSD is exceptionally well positioned to capitalize on several high-growth opportunities that could define its long-term success. A massive, largely untapped market exists for using stablecoins to improve corporate finance efficiency, particularly in B2B payments and corporate treasury management.
Using it for business-to-business stuff.
Exactly. Imagine streamlining complex cross-border B2B payments, optimizing global treasury management for large corporations, enabling 2047 settlement for intercompany transfers. PYUSD's regulated status and trusted brand make it an ideal low-risk solution for enterprises seeking these benefits without the counterparty risk often associated with less regulated stablecoins.
Okay, B2B is one. What else?
Then there's the burgeoning space of what we might call regulated DeFi.
Regulated DeFi, isn't that an oxymoron?
It might sound like it. But while it may indeed be shunned by DeFi purists, PYUSD could very well become the foundational collateral for a new wave of permissioned or regulated DeFi applications. These platforms would cater specifically to institutional clients. Think banks, asset managers, large corporations who require compliant, transparent assets to participate in decentralized finance.
So DeFi for the big players who need rules.
Precisely. And finally, emerging markets. The strategic focus on low-cost global remittances through integrations with Zoom, and eventually, the Stellar network positions PYUSD to capture a significant market share in developing nations.
Bringing cheaper remittances to more people.
Exactly. In these regions, traditional financial services are often expensive, slow, or inaccessible, meaning PYUSD could offer a truly transformative, inclusive impact for millions who are currently underserved.
So when we Piece all of this together, the technology, the ecosystem, the challenges, the opportunities. What does this all mean for PayPal's long-term vision? Is PYUSD just a payment token, or is it something much, much bigger for the company?
Ultimately, PYUSD's strategic importance to PayPal extends far beyond its immediate use as a simple payment instrument. It is truly the cornerstone of the company's broader Web3 strategy.
The cornerstone. How so?
Think of it as the critical bridge connecting PayPal's colossal existing Web2 user base, the internet as we know it today, with centralized platforms like social media and PayPal itself, to the burgeoning world of decentralized applications, verifiable digital ownership, and the tokenization of real-world assets envisioned by Web3.
Bridging Web 2 and Web 3 via payments.
Exactly. As a programmable digital dollar, PYUSD can be seamlessly integrated into future PayPal services that leverage smart contracts for automated payments, secure escrow services, and a whole host of other innovative financial products we can only begin to imagine. This ensures PayPal not only participates in, but actively shapes the next generation of finance,
Staying relevant?
maintaining its relevance and leadership in an increasingly tokenized global economy. The ultimate measure of PYUSD's success, I think, will not simply be its market capitalization relative to its competitors.
Not just about being the biggest.
No, but rather the total payment volume it processes and the genuine economic activity it enables. PayPal's communications consistently highlight these utility-driven use cases. Therefore, key performance indicators for you to watch are its on-chain transaction volume for non-trading activities, the number of merchants actively settling transactions in PYUSD, and the volume of cross-border payments funded by the stablecoin.
Look at the actual usage, not just the market cap.
Exactly. If these utility-based metrics demonstrate sustained growth, PYUSD will have undeniably achieved its strategic mission, regardless of where its market cap sits.
So what does this all mean for you, our listener? Our deep dive into PayPal USD reveals a company making a remarkably pragmatic and, well, forward-thinking strategic move. They're leveraging their immense brand trust and vast user network, not just to dabble in crypto, but to fundamentally bridge the gap between traditional finance and the evolving digital asset economy. It's less about chasing ephemeral crypto trends and much more about building a new foundational layer for the future of commerce itself.
Precisely. PYUSD is best understood as a multifaceted bridge. It's a bridge for you, the mainstream consumer, into the world of digital assets. It's a regulatory and operational bridge for the traditional financial industry to engage with blockchain.
Right.
And it's a technological bridge linking PayPal's vast Web2 ecosystem to the emerging possibilities of Web3. Its unique, deep integration within PayPal and Venmo gives it a distinct pathway to success based on genuine real-world utility, not just speculative trading or abstract technological promises.
And that's really the core takeaway for you today. PayPal isn't just launching another stablecoin. They are trying to fundamentally reshape how we think about digital money, how it moves across borders and between people, and who ultimately benefits from those movements. It's a bold vision from a very familiar player.
If we connect this to the bigger picture, it raises an important question for you to consider as we look to the future. As a trusted entity like PayPal embeds this digital dollar so deeply into everyday life, how might PYUSD redefine not just how we transact, but our very definition of what money can be, especially for those who've been historically underserved or, frankly, overcharged by traditional financial systems? It's a fascinating experiment in financial evolution unfolding right now.